Welcome to another Monday Market Update with Kristen Mason Coreas, owner of the Homestay Mason team. Today is Monday, December 9th. I am fresh off a hockey weekend out of Long Island, New York is where I was this weekend. And so at Homestay Mason, sales activity has slowed down a little bit. That is typical this time of year, although we did have a closing. We had a buyer closing on Friday. And I think that's all we have on the books for this year. We do have a listing we were hoping to get live that it looks like it's going to probably go next year, but who knows? In real estate, things are often moving targets. So that could happen this year, could happen next year, but I get to enjoy a little more time with my family this time of year, which is nice. And I hope you all also get time with your family this time of year during the holidays. That said, I'm here now to share with you what is happening in real estate in the area as of today, December 9th. Let's jump in. So interest rates are actually at their lowest point in over a month, which is kind of exciting news. You always got to see the positive, right? And so 6.69, yeah, I mean, we've been hovering close to 7 for a while. As a reminder, the historical average for interest rates is 8, so we're still well below that. Many of us were spoiled for a long, long time. We're just not going to even talk about where interest rates were before because we're not going back there. The expectation moving forward is that we're going to hover, we're going to live between 5.5 and 6.5 is kind of even moving forward. So in the next slide, you will see, and in some of the predictions, you will see that interest rates may continue to come down. Do not expect that's going to be drastic. The overall expectation is between 5.5 and 6.5 is where we will be living. So this interest rate is down from last week and down 0.34 from last year, although certainly not the lowest point that we've been in the past year. So what does that mean for market activity? Well, what happened when interest rates went down was actually purchase demand went up. So it was applications. So, and actually you'll see that, I guess, upcoming in some of my slides, mortgage applications increased when the rates went down. Also, as a result of the election, there's always going to be some movement. So it does seem like there are buyers out there, serious buyers out there buying, and you'll see that again in the stats to come. So what Freddie Mac said was the responsiveness of home buyers to even a small change in the interest rate shows that affordability, is persistent because we need better affordability overall. And that's why those lower interest rates increase affordability, and we saw buyers coming back out to buy. So in national economic news, as of December 5th, this is what I was looking for here. Purchase applications jumped 6% to the highest level since January, although down 21% from last year. So that's why it was interesting. I wanted to look back and see what were interest rates last year. So interest rates, so we are lower than we were by, what did I say, about 30% from what did I say? It was here. Down 0.3 from last year in terms of interest rate, but the mortgage applications were also down 21%. So my speculation there is that last year, people hadn't necessarily accepted where we were with interest rates because we were still kind of close in the rearview mirror to where interest rates were super duper low. Now, where we are today, the super duper low interest rates, that's a professional term, by the way. So those are further back in the rearview mirror, which is why today people do seem to have accepted the new reality that we're not going back there and we're in the 6s. And in the 5s would be great. We'd love to be in the 5s again. So that's our current reality. And that's why last year at this time, probably a bunch of, applications went out last year because of what was going on at that time versus what we're looking at now. Right now, these numbers look good. These interest rates look good in terms of our current reality. So in other news, loan limits are not expected to, will. So those limits have changed. So that will make it easier for borrowers to borrow with FHA loans with higher limits allowed there. So that's good news for buyers. And then in regards to home price expectations, so a lot of different people, there are lots of people out there making predictions, and overall the prediction is that home prices are going to continue to increase. This forecast is a 5.2% increase this past year in 2024, and prediction for 3.8% next year. And that's in line with what else I saw today. I saw a long chart of predictions in terms of price forecast for next year, and only one of those, one of the very long list of price forecasts had price coming down next year. All of the rest of them had price going up to varying degrees. And the person who was sharing that with us said that what's important here in terms of price increase next year is that it is we're looking at a healthy price appreciation versus in years past, it was too much. The price appreciation was big numbers, and that was really not sustainable. And we do expect continued price appreciation because we are continuing to see more demand than supply. So for the Mid-Atlantic region, which includes Virginia, D.C., Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey, seasonally, we're seeing what we would normally see during a holiday week. The market slowed down during Thanksgiving because this data is as of December 1st. So there was less new contracts, less new listings and showings, all down for the Thanksgiving week. And time to contract also slower. And however, list prices are up. So the median list price in the Mid-Atlantic region is up 4.1% from last year, and also up from last week, which is a bit unusual to go up week over week at this time of year, up 2.7% compared to last week. So then let's look at the local DC metro area. And here, almost everything except for price, year over year was down. Showings were down, purchase contracts down, new listings down. Active listings also. So price and active listings are up. So active listings being up is good. More inventory is good. That's what we want. And we have been seeing that slow, steady increase in inventory. So I like to see that inventory is up from last year. That contributes to a healthy market and those prices. Again, we just still have more demand than supply is the bottom line in our market, which is why prices are continuing to go up and predicted to continue to go up. Compared to last week, this is December 1. So again, looking at the Thanksgiving week, what happened was showings were down from the week before by 30%. Contracts were down. Time to contract slow down. So that means faster, actually. That's a little bit of a surprise. But new listings down as well as active listings. So everything down week over week except for price, which is essentially flat. So then in our hyper local area, Arlington, Alexandria, Falls Church, and Fairfax, where Homes by Mason does most of our business. So this is the most current data. So this shows you from December 2nd up until yesterday, December 8th. And so this is the week after Thanksgiving. You will see that new listings did increase as expected, right? So things were down the week of Thanksgiving, and now we're up by 115%. But what's interesting is pending contracts actually only up by 10%. It was 178 last week during the week of Thanksgiving and 196 this past week. So not a huge difference. For me, again, I'm attributing the buyer activity in our hyperlocal area, especially to probably people coming in to work for the new administration. Those people are probably, looking for homes to get started work in January. So that means when we look at how many new listings came on the market compared to how many homes went under contract, there's a healthy number left over, 76% demand to supply ratio. And compared to last year, so I did, contracts compared to last year, I took a look at. So basically flat in terms of number of contracts compared to last year, but supply was up 28% compared to last year. So more of the trends that we have been seeing in terms of slow incremental increases in inventory, and yet demand is still strong. So that, I think, wraps up the Monday market update for today, December 9th. Thank you for watching. And if you value what I share here, please give me a like or give me a subscribe on Facebook and or YouTube. That's where I show up every Monday. Ask your friends, share this with your friends, and ask them to join me. And also you can sign up to schedule time to talk with me. So that link is down below if you want to talk with me about what's happening in the market and how it impacts you and your decisions. Or call me directly at 571-210-1866. You can call or text that number, and reach out by email at kristen@homesbymason.com. Or check out the website anytime at www.homesbymason.com. Thanks for watching, and I hope you have a great week.